guys, in this video, we're going to be talking about, is the next price of Bitcoin going to be $11,200 or $9,750? And big news on the cryptocurrency scene, guys. Big news. We're going to be talking about whether or not this FCA ban of the sale of crypto derivatives to retail consumers is going to impact the price of Bitcoin. And of course, the Mt. Gox rehabilitation plan is going to be over by October the 15th. Will the 150,000 Bitcoins are being released back to the market have an impact on the price? And I want to thank everybody for getting the likes in the last video, up to 8 likes. We had 8 likes. Can we get 4.2 thousand likes on the next video? If you think that sounds interesting, then I think you should definitely keep watching this video. Whoosh, whoosh, whoosh. Hi guys, my name is Rocky, not Carl, the Moon, and I'm here to bring you this cryptocurrency video. Looking here at the Bitcoin prices, are we forming a symmetrical triangle which has the potential for a drop down in the prices to a low of 9,751, or indeed a high up here at 11,200, and let's call it 11,300 actually, with this one. Let's take a look at that in this video. We have a couple of things to discuss with regards to yesterday's video and how we saw the price action performing. Now, we did talk about this potential for symmetrical triangle. We did remind folk that there was this fake out territory, unique aspect that we talk about on this channel, you don't see on any other channels, where we are having this potential breakout of the symmetrical triangle, but it wasn't actually happening for us. We haven't put in a high over our previous high over here on the 30th of September quite yet. Let me see as well, full disclosure by the way, to remember how Carl the Moon starts his videos off, I had to go and look him up on YouTube. Let me just do it again so we could see what it was that he was talking about in his video. So full disclosure, so that you know them not getting any ideas every one of my ideas is my own in videos for Bitcoin and Tezos, Ethereum, chain, like any cryptocurrency I do. I never, ever, ever watch another person on YouTube do a video, but I had to watch this to remember how Carl the Moon starts off his video. And so I did that, and in his video though, of course, I couldn't help but notice him say something about massive divergence. Let me just see here, what's he talking about? So there's a high here, I can't see the dates or anything on here, and a high followed up then here, and there's this divergence. He called it massive bearish divergence. So it mustn't be on the daily time frame that he's looking at, because we can see here that we didn't get a high in. So was he looking? Oh, that's the 4-hour time frame. So it's not, it mustn't be the 4-hour that he was looking at. Was it the daily that he was looking at? Well, that's not as high, so it couldn't have been that one. Is it the hour time frame, this massive bullish divergence? No. Sugar. Let me just go back over at Carl and find out what it was he was talking about. Where did I put it? Where did I put his thing? Here. So skip into his video a wee bit.
Monthly chart, and someone asked me in yesterday's video.
Monthly chart. Somebody asked me monthly charts. So this is what we talked about. We already talked about this ages ago. Gosh, talked about this more than about a week ago. Today we talked about this actually as well. So Carl, well done. You are keeping that consistency. Consistency is key in YouTube. And Carl, your news being a week behind mine on the terms of technical analysis, you are consistent with that. Okay, so what was he talking about with regards to this bullish or bearish divergence? We've got a high over here and a high over here. This is higher, the most recent one, compared to this one, and indeed it is, of course, bearishly divergent. There we go. So yes, okay, old news. We've already talked about all of that. Let's just instead go back down to talking about what we were talking about in terms of actually trading this thing and how you would go about looking at this. And I'm going to do this on this chart just now. I appreciate that there's mess on this chart. Okay, look, I know I clean up these things all the time, right? I appreciate there's mess on this particular chart. I've got other spectacularly clean charts with all of the things laid out here. Just take the brush marks off. All of the things laid out with labels and everything else that you can see, the names of them all and all this great stuff, super clean. But we're not on the clean chart right now. What we are on instead, if you excuse me, is this messy one. And we're looking here to see whether or not the price action is going to be able to bust past certain levels. Now, there's a potential for a symmetrical triangle on the go here, which we've come back into. I could rearrange this to kind of accommodate the most recent price action, but I cannot be bothered. And we have two zones above and below, which we could consider to be fake out territory. Perhaps this one here is a bit low with regards to that. Just really looking at the previous low over here and the previous high over here and saying, well, until such times as we go past either of them, of course, we're not really doing anything spectacular. Remove all of the drawings off here, and you can see that really what we're trying to just struggle with and decide is whether or not, maybe I should have left that where it was actually, that fake out territory, was whether or not we're going to go on and create a lower low over here compared to this one, in which case this zone here overall just adds up to being a lower high in terms of the daily time frame, from a high here, low here, lower high here, lower low here, a lower high here, and then if we break down past the 10,000 zone mark, we're talking about a lower low, with this just being flux in between times. And what do I mean by flux in between? Well, I mean things like how we have, if I jump over to the Bitcoin CME charts, how you could have thought, for instance, this was a lower low over here on the chart, and compared to this low, yada yada, it turned out to just simply be flux along the way to a subsequent actual local high there at the top here, where we eventually came in with the top of the price action. So that's what I mean with regards to whether or not this here is a genuine lower or higher low. And this could be sort of broken down in numerous other ways. For instance, it looks even more like flux if we just jump up to the 2-day time frame. You go high, low, high, low, high, and then where are we now? And the answer to where are we now boils down to this set of patterns, this set of drawings that we have on the chart right here. Of course, like, to make this easier for you to see, I will hide the moving averages just the now. Actually, I'll go up to the 24-hour time frame and point out, before I hide them, that we're kind of combating with the 21 EMA. If I hide all the drawings, you can see them. Combating with the 21 EMA and the 55, which is something key that we've spoken about in recent times with regards to this cross of the 21 and 55, and how it's quite a good indicator of trend, looking back the way. If I just do this properly so you can see, looking back the way, when they cross towards the positive side, as we saw over here in April, of course, that's a pretty much good indicator of the trend towards the upside. When they crossed over here in March, that was a good indicator of the trend towards the downside. And of course, indeed, they crossed back over here on the the 11th of September, crossed again on the 16th of September, crossed again on the 21st of September, during this period of sort of consolidation, as we kind of decide whether or not we're going to be going up or down. Above our heads, we have the 50 simple moving average. Of course, that's a key area for us, and around about 10,900. Taking that out and going up to 11,100 would be going past this previous high and pushing past that fake out territory that I spoke about before, and leading on towards perhaps getting up towards those mid 11,000 areas or the lower 11,000 areas, just to kind of get that measured move. And then towards the downside, we're talking about eventually, perhaps the possibility of coming down here and testing the 200 simple. Looking back the way, we haven't actually tested the 200 simple since the 9th of May in this previous consolidation zone, and we are often want to do that, WONT, Jane Eyre language for you there, and of course we do that all the time. So Bitcoin USD price cost in the EMA 21 says my alert from Bybit. Just jump over to the Bybit chart here and let's see how timely that was. Well, yeah, we crossed that like a wee while ago. So that was what I was talking about anyway. That just came up on my phone, which I use to record myself as I'm talking in these videos. Right, so how far into we are this? 9 minutes? Gosh, I've not really got very far into it, have I at all? Thanks so much for tuning in. I really do appreciate it. Let's get through it then, shall we? The symmetrical triangle is what we're looking at. The drawings back on the chart here. Where is this one here? Yes, if we do move up past this, we have traffic lights with this red line. Just hide the moving averages. Gosh. Right, right? We're moving past this red line. We've got a sort of series of traffic lights in here with this red, amber, and green line here showing us the way. Moving past the 11,150 zone I just got another alert on my phone there saying it's crossing the 21 EMA. Shush, by bit. Distracting me. Moving up past this is obviously clear bullishness, and we could then go on in and anticipate a golden pocket retrace with our next clear area of resistance where this fuzzy grey line is here, coming in at 618 there, about 11,500, let's call it. If we were to, find any resistance along the way, it's going to come in at around about the potential 236 zone here at 10,867, or indeed this amber line. We're looking at the bodies opens and closes here on this time on this chunk of price action between the 16th and 20th of September as the next zone, and of course then thereafter 11,200. If we do actually go down, having remained below the 236 on this Fibonacci, we're looking down here at this symmetrical triangle and asking questions about whether or not we go down to the 50% zone just for continuation of this consolidation. A golden pocket retrace on this is indeed just more continuation of the consolidation in the kangaroo market, so you would be looking at something like that, and but the potential to kind of extend in this zone here before eventually breaking out one of these two directions, overall. But currently what we've seen happen is a pullback from this area, and we're back into the zone here at 10,684. The first thing that's really going to strike off any sort of negativity for the next day or two will of course be movements down below 10,650, where we have of course that 382 lining up neatly for a move towards the 50% Fibonacci retracement and perhaps the 618. If we do go down and touch the 786, of course, we're doing this past the fake out territory, and that's the TA that we're going to look at for today, really overall. And in terms of this time frame, you've got high, low, high, low, high, low consolidation. There isn't any sort of divergences to be worth talking about during this phase overall here. We've already pointed them all out in all of the previous videos that you'd want to look at, including if you go back a week ago and look at that one about the monthly close where I talked about the divergence and everything else there as well, of course. And all that stuff. So that's that. So let's take a look at these news articles. And thanks so much for joining me today. So what we're talking about here is that the FCA, Financial Conduct Authority, which used to be the FSE in the UK, FCA bans the sale of crypto derivatives to retail consumers. The FCA has published final rules banning the sale of derivatives and exchange-traded notes, ETNs, that reference certain types of crypto assets to retail consumers. And by certain types of crypto assets, this thing doesn't really distinguish, this article that FCA has put out, which types those are. By looking back in the past at certain documents that the FCA has put out, I would go to say that the type of assets that they would not be looking to ban are security ones. So that kind of has a little bit of sort of positivity in terms of things like Tezos, which are going to have property and stuff like that become tokenized and tradable on the Tezos network, and maybe perhaps there'd be things based on that. Perhaps housing funds could, or like retail real estate funds which use Tezos-based securities to invest in real estate projects, for instance, wouldn't necessarily fall under the auspices of this legislation, although it doesn't actually mention that in here. Instead, it just wants to sort of attack cryptocurrency in general. It says a few things here. The inherent nature of the underlying asset, because, they can't be reliably valued by consumers because of the inherent nature of the underlying asset, which means they have no reliable basis for valuation. That's kind of like implying as if everything else does. While it has more things that you can look at, there of course is there's always going to be a speculative nature to everything in the market anyway. The prevalence of market abuse and financial crime, well, we've got to laugh at that. If everybody remembers the 2008 financial crisis and why it all happened, the prevalence of market abuse and financial crime in this relatively tiny market of cryptocurrency certainly pales in comparison to the financial crime and market abuse which the FCA and FSE has monitored over the years. But lols on anyway, the extreme extreme volatility in crypto asset price movements? Sure, there is extreme volatility. Sure, there is. Okay, fine, great. Inadequate understanding. I mean, there's obviously in other ones, but you can't just blanket ban things. The inadequate understanding of crypto assets by retail consumers. You got to laugh at that one as well. I find this kind of funny because most crypto assets, of course, are open source projects, which means that the actual, the really specific understanding of these things actually does come from retail consumers more so than institutional ones. However, they have retail consumers have an inadequate understanding of trading and risk management. But to say that they have an inadequate understanding of crypto assets is maybe missing the point somewhat. And a lack of legitimate investment need for retail consumers to invest in these products, which I found quite laughable, really, because you're using the word need there, and of course there's things like the need for pension funds and the need for to be able to hedge and stuff like that for other investments. But I find that this article could be this legislation could be challenged if anybody really wanted to, but I don't know if there is actually the ganas, whatever you call that. What's the word in English? That's Spanish. The desire for that amongst the institutions and whatever that are currently offering these products to people. Overall, I don't see this as having a massive impact on the pricing, given that these things have been kind of in the works for quite a while. However, of course, we have seen a down day today as this news has come out, and it would be beyond me to say that there hasn't been some impact already felt by this sort of negative news with regards to crypto assets in general. And yes, so what can we expect from this? Well, I think we can expect clarity. Clarity perhaps to come for this would be through the actual institutions and whatnot which offer these products currently might actually seek clarity and then find that for us down the line. I think that Sheldon Mills has started that, I suppose, with some sort of chat about it. This ban reflects how seriously we view the potential harm to retail consumers in these products. Consumer protection is paramount here, but of course that's actually the perception of consumer protection is paramount here. While we know from things like the housing market that consumer protection is definitely not paramount for UK financial products, it's just the perception of protection is what's valuable. And what do I mean by the housing market? Well, I mean the quite clear and obvious, somewhat pseudo grey area legitimate type functioning of the housing market in the UK, whereby Russian oligarchs have been able to launder their money through buying houses in London, and that's commonly accepted practice, of course. And if they didn't want that to happen, they could ban people from paying for houses in cash, for instance, or indeed other methods of buying and selling houses, including part exchange and whatnot. But they don't do that because they're not actually interested in that. They just want the perception of it. So anyway, significant price volatility, which Tesla, combined with the inherent difficulties of valuing crypto assets reliably, okay, banks, places retail consumers at high risk of suffering losses from crypto derivatives. 2008. We have evidence of this happening on a significant scale. 53 million quid is going to be saved. So significant scale, well, it was going to be 53 million. Actually, it counts for 0.033% or is it 0.3%? Anyway, let's call it the big one, 0.33% of the entire investments in terms of the UK pounds going into investments goes towards crypto assets. So they're looking at something which is 99.67% is not to do with it. 0.33% is to do with it, and they're calling it significant. Of course, 53 million in isolation is a significant number to any individual, but really this is hardly significant compared to, say, spread betting, or indeed being able to go into Ladbrokes or any other gambling business and put money on a bet, for instance, on the horses. Significant risk there. Much more. Let's just see what the gambling industry is worth per year. Gambling industry UK value per year. And we have a figure of 14.5 billion in So gambling in Great Britain was worth over 14 billion, and we're talking about 53 million. So significant depends on your definition of the word significant. Let's move on here and look at the next piece of news. How long is this video? 19 minutes. It's too long, but here we are. Here we have it. Anyway, whoosh. The Mt. Gox hacks will always be remembered as one of the worst in the history of Bitcoin. Yeah, cool. The victims have been waiting for years for compensation. However, the implementation of the rehabilitation plan has been repeatedly postponed. A document from the Tokyo District Court dated June 30 indicates that a decision on compensation could be finalized soon. The document was called to mind by crypto community member Mr. Whale. Was called to mind. Yeah, okay. And sets October 15 as the final date for receiving a rehabilitation plan that will allow victims to receive compensation. Therefore, there is growing speculation that 150,000 Bitcoin from the Mt. Gox trustee could move on October the 15th. Just a quick note, 150,000 times the current price of $10,680 equals what's that? That number there. There you go. That's how much money could come into the market. Of course, that's a significant amount of money, but we do see a lot of volume every day. Is there going to be? Is that going to have an impact on us? I think it could certainly have an impact, a dampening effect in terms of the prices. Should people want to simply, take that money and that they get and convert it into fiat or whatever? But we will see whenever this kind of happens itself. October the 15th, though, in terms of technical analysis, just purely off the back of this chat that we already had at the start of the episode. If I just want to put things into context, go up to the 24-hour time frame, look at around about where this triangle is coming to an end, and you can see that we are already in this zone here where we could see, for instance, around about the 13th of October, a price drop down to 9,300, and we could consider that from here to be a 10% drop down in price. That would be considered significant, but are we looking at correlating an event which is real to, but not necessarily the determinant to factors which are already essentially priced into the market? Who knows? It's interesting though, definitely. Potential catalyst for the Bitcoin drop. Okay, so the exchange handled 70% of the Bitcoin's transactions at the time, and there's 840,000 Bitcoin in stolen funds. So the fact is that 150,000 Bitcoins getting returned to people is, minuscule in terms of the actual amount stolen, but the value of those coins has increased quite a lot since the hack happened, whatever time that was. We're okay in terms of like the fiat value for people. There's other bits of news in here. If you want to read these articles, then just Google them, because I'll probably forget to put the link in the description. Although their link might be there, I should do that. October the 15th does not have to be the big decision day. Thus, the extension refers to the presentation of the rehabilitation plan and not to the reimbursement of the BTC. Thus, the trustee only has to submit a plan by October 15. Okay, so actually, the distribution isn't necessarily going to happen then, and they might try and sort of mitigate factors of the potential dump of bitcoins onto the market as a result of this sort of this rehabilitation, so to speak. Meanwhile, analysts like Willy Woo, always trust everything Willy Woo has to say, have been bullish about the health of the market and the price of Bitcoin. Woo believes that Bitcoin has already seen its lowest price during 2019. Capitulation happened last year at 3K. We have been in a bull market ever since. It's just being camouflaged by BitMEX traders with wild swings they create. 4K to 14K was the mother of all squeezes. Retracing back to organic valuation took a while. Thanks for saying nothing and using up every single character on your tweet there, Willie. We really do appreciate it. But people subscribe to the Rocky Outcrop channel because we have been doing this very precisely and in great detail all along the way, and we don't just rely on the sort of prestige of our usernames because we got into Bitcoin back in 2012 and became a public figure. Instead, what we do here is actual genuine hard work and really put our money where our mouths are, because we're actual traders. So if you like the sound of that, then I think you should definitely subscribe to this channel. So you can do that by hitting the button down below. I'd really appreciate it, but I'm going to tune out right now. Thanks so much for tuning in. My name's been Rocky Outcrop. You can share this video with your friends simply by telling them to type in youtube.com/Rocky Outcrop and they'll find my channel. It's really, really good, and you'll be a star for having shared the best kept secret in crypto technical analysis. Thank you so much for tuning in. I'll see you next time.